All right, folks, welcome to Investing for Beginners podcast. Today, Andrew and I are going to share some news with you. And so let's just kind of dive in. And Andrew, I'm going to turn it over to you. Sorry, Andrew.
Yeah, thanks. Really excited today. It's a big announcement for our business. As you guys know, I've been running what we know as Value Spotlight for 11 years. It's been a long journey. But moving forward, Dave's taking over as portfolio manager. And it's going to be, there are many reasons. We're going to talk about why this is so exciting. But, it's obviously it's my baby and I've been doing it for a long time. But as I look over the stock market, I look over and try to objectively measure how I'm skilled or where my advantages are as an investor. I really don't see very many obvious opportunities that align with my skill set, my tendencies, the way I like to invest. And so I've come to this decision that I think our next set of opportunities requires someone who can dig much deeper in the spaces that we find most attractive, the spaces we're most bullish on in this time period moving forward. And that's payments, semiconductors, and energy. Dave is the perfect, most uniquely designed person to lead this part of our journey. His passion, curiosity aligns so well with this. So, with that, we are going to talk about this next chapter and the three industries that we're going to be focusing Value Spotlight on. So, I'd like to ask you, what attracted you to these three industries? And maybe we could just start on payments first.
Well, I think, first of all, it's always been a passion of mine since I worked at Wells Fargo. The whole banking industry and financials were something that just, for whatever reason, I understood and was able to kind of get my brain around, and I found it very attractive. And when I think about the whole payments industry, a big reason why I think that this is a super compelling idea and industry to look at is I read, I believe it was in MasterCard yesterday, that they just now are coming to the point where about 50% of all transactions, i.e., buying and selling stuff online or just in general, is only 50% cards, 50% cash. So cash around the world is still a really, really big part of everyday usage of money. And so there is still a very, very long runway, even as big as companies like MasterCard and Visa are, which they're huge, and other ones like PayPal and so on. These are big, big companies. And there's still a lot of room to run. And there's a lot of great investment ideas and opportunities in there because as the industry continues to expand, yes, there are companies beyond Visa and MasterCard in the payments industry. So as they expand beyond those, there's lots of opportunities, and we can look at those and we can take advantage of those opportunities to help grow our wealth. And I think this is still early innings for this industry, and I'm super excited to learn more and more about each company.
How solid do you feel like this industry is over a long time period? Do you feel like somebody could just take a bat and disrupt it, or does it feel like super rock solid?
It feels pretty rock solid. There are certainly there's going to be disruption when you're talking about any sort of technology. There's absolutely going to be disruption of varying sorts. But companies like Visa and MasterCard, which are kind of the bedrocks, American Express, all three of those companies are kind of the bedrocks of the whole industry. But you are going to see things like cryptocurrencies, i.e., stablecoins, which we've talked about in the past. There's going to be other technologies, remittance over cross border payments, just the technology itself and how we make payments. You look at what's happening in Europe compared to what's happening in the United States. You look at what's happening in Latin America, i.e., Brazil, what's happening here. There's lots and lots of changes going on. But the bedrock of how money moves from our bank account to a merchant and back is not going to change a whole lot. And I don't envision any of those things being really disrupted.
Yeah, me neither. Um, Promise we'll move on from this, but you mentioned the different global economies, some of them emerging. How does the adoption of smartphones in those places affect what happens in payments, if at all?
Oh, it's had a huge, huge impact. So here in the United States, or just in the West in general, if I think of United States, Canada, maybe Europe, and some other countries that are more air quote developed, not trying to throw shade at anybody else I didn't mention, but just if you think about those countries, most people in their homes have more than one computer. So we have laptops. We either have a laptop for work, we have a laptop for personal use. We have tablets, we have computers, we have watches, we have all this access to all this technology and all these computers. But a lot of these, I guess you would say, more developing countries, I'll pick on two in particular, Brazil and India. These countries are behind that curve by a lot. And so the iPhone, or just mobile phones in general, so the Samsung or the iPhone, have had a huge impact on the adoption of payments, how people live, access to information, jobs. All these things are new to those parts of the world. And because they're newer, there's just huge opportunities in those countries to enable payments. And I would argue that those countries are actually ahead of us when you think about mobile payments, because they're more mobile native than we are. And not to pick on my parents' generation, but our grandparents, right? They're not really mobile first people. They may know how to use their phones, but they're not mobile first. And so it's not natural for them to go to the gas station and pay for gas with their phone. It's more normal to, gasp, write a check, or pull out the credit card or the debit card. So in the countries I was mentioning earlier, Brazil and India, that is very much in play, where people use their phones. I saw when I went to Brazil, for example, I've never been to India, but when I've been to Brazil, I've seen a wide range of age ranges all using their phones to make payments, transfer money, if they go out to eat, to split the bills, all those kinds of things that is not as native here yet.
Just the sheer number of people in those countries, it's massive.
Massive. Well, India's, I want to say, is the largest country in the world by population now. If they're not, they're neck and neck with China. So yeah, they're huge.
That's cool. It's exciting. Did you find payments hard to understand at first? Was it easy to understand?
No. God, no. No, it was super confusing. I first came across the company Visa and MasterCard probably early on in my investment journey, 2015, 16. And I remember when I was at the bank reading through JP Morgan's 10K, and they were talking about payments and whatnot. And I thought, okay, well, Visa and MasterCard is something everybody has. And so I started digging into it. I didn't get it. I just didn't understand. I didn't understand the business model. I didn't understand how they made money. It just seemed like, voodoo to me. And I put it away, just, kind of ignored it. And then I just kept coming across it, reading articles from other people, seeing people using it, different technologies that were advancing, things like on the iPhone, having the ability to upload your card on the iPhone and make a payment at a gas station, for example. All those things were newer, and I just didn't understand it. And so during the pandemic, I had time and I spent a lot of time reading through the company's reports, reading what other people had to say, watching YouTube videos. And eventually, during all of that, one night when I was laying in bed, it hit me and I got it. And I finally understood it. But it took a lot of effort for me to get that. And then the next thing I did was I started writing about it. And that helped reinforce it, because that is, to me, one of the best ways to learn is to put it in action. And so once I started doing that, it really started to become not second nature, but certainly way more understandable for me.
Yeah. And there is a lot to this industry. There's a lot of nuance. There are a lot of ways that things work that I think most people don't understand. What do you mean Visa is not the person I'm making these credit card payments to?
Right.
I thought I owed the money to Visa.
No.
So it is cool that you overcame it, you pushed through, and really tried to figure something out that was not easy to figure out.
Yeah, I was definitely pushing against my circle of competence. I was trying to expand the boundary. And yeah, you're right. When I first started looking at those companies, I really thought that my Visa card from my bank was really Visa's card. And after discovering all that, that was like the first thing I uncovered was, well, actually, no, they're not actually financial institutions at all. They don't handle money. They don't deal with money. They're not a bank. And that's what most people, when they first read about those companies, in particular, American Express is a little different, but Visa and MasterCard, they're not banks. And a lot of people are surprised by that.
Any other thing about payments that just really excites you, or you feel like if investors have kind of heard about it but haven't really gotten the bug about having serious allocations to this industry, is there anything that kind of jumps to mind?
I think there's a couple things about it that I find appealing. Number one, I mentioned the whole relationship between card payments and usage of cash. And because there's still such a long runway, there's a lot of great opportunities for people in the payments industry to figure out ways to make paying for things easier. One of the biggest gripes, right, about just about anything online is sometimes companies make it really, really hard for you to pay them. And it shouldn't be that way. Like, well, yeah, I want to give you my money. Why are you making this so hard? Kind of thing. And think about everyday things that we all do. Paying a mortgage or paying your rent should be a lot easier than they a lot of times are. And there's a lot of room for technology to do that. There's also a lot of room to help people that don't have access to education about money or don't have access to a lot of the different things that many people may have, credit or the ability to understand their budgeting. All these different things, maybe they may not necessarily tie directly to payments, but the better educated people can become about money and how they use it and how they spend it, the better our society is going to be. And I think payments can help kind of bridge that gap, not only through the education, but also the ease of use. One of the things that I've always noted that I thought was interesting about the iPhone is it's so easy a 4-year-old can use it, but it's also easy enough a 4-year-old can use it. So if we could ever get to that point with payments, and we are getting there, that I think that would be a huge unlock for humankind just in general. And that's one of the things that I have really been drawn to about it. And there's just lots and lots of ongoing opportunities. It's not just Visa and MasterCard. There's lots of companies out there like Toast, for example. There's a company in Uruguay called Delo that's really good at helping companies navigate cross-border payments. And those are their niches. And there's a lot of need for that. And there's a lot of ability to help people with that. Companies like Remitly and Wise are hugely beneficial to people that are trying to send money back to their families, for example. So just those examples keep me really excited about what's going on in the whole payments world.
Yeah, it's super cool. Like once you start seeing it, you can't unsee it. You really do see these trends that you're talking about. And it is generally good. We want to live in a place where people are good with their money and understand what they're doing. And to your point, payments can be, maybe Trojan horse sounds a little nefarious, but payments can be that vehicle for a lot of people, especially as these things develop. So that's super, super fascinating. Let's move on to semiconductors. This is one that obviously has gotten a lot more attention lately with everything that NVIDIA has been doing. But break it down. There's always people who are skeptical or see the downside in everything. But what is it about semiconductors that make you think the best days are not behind it?
Well, I think it's unquestionably the digital oil of today. Everything that we do now is based on computers or some sort of automation that is being run through a semiconductor. Even things that we don't normally think about, your coffee maker, your dishwasher, your microwave, obviously cell phones, our cars. All of these things have different components or parts that semiconductors play an integral part in, and that's only going to continue to accelerate. If you think about like the cloud, for example, we're still very early innings in that, and we're still very early innings in even businesses being online. There are a lot of businesses out there that are still not online, and semiconductors will play a huge role in all of that area of growth. And so that, to me, is one of the reasons why I think semiconductors is really a vital, growing place to be. And as the industry continues to evolve, I don't think anybody had NVIDIA being what it is on their bingo card 5 years ago. Intel was the dominant company for a long, long time, and now NVIDIA is. But there's lots of other players in that space. Taiwan Semiconductor, ASML in the Netherlands. These are huge companies that have a very integral part that maybe aren't as well known as NVIDIA. You walk down the street, most people are going to know who NVIDIA is now today, but some of these other ones, nobody knows who they are, and they're just as integral to the process as NVIDIA would be.
Totally. So take us through that process. How did you learn everything you know about semiconductors? Because it's on a level that's way above most anybody.
Yeah, I literally had to do the same process that I did with payments. It started with Andrew when he picked Texas Instruments for Value Spotlight. It was the first time I'd really been exposed to semiconductors. And I thought it was fascinating, but I did not understand it at all. It just went completely over my head. I didn't understand the process. I didn't understand really what they were. I didn't understand what was the big deal about how they're made. And I didn't understand that there's a difference between the physical making of the chips and the designing of the chips. And I didn't understand the differences between those. And Andrew very patiently walked me through these concepts. And with his engineering background and working in the industry, he was able to help me understand a little bit better. But I had to do the same thing. I had to read a lot of 10Ks. I had to read a lot of industry reports, a lot of other thoughts about other people. And then I did a lot of digging on YouTube to just see the things. Like for me, as a visual person, seeing how Texas Instruments makes their chips was a big unlock. Watching how ASML does their thing, how they build their machines and how their machines work was a huge unlock for me. And so there's just, it took a while. It wasn't easy. And there was a lot of technology and technical terms. I remember reading Intel's 10K and looking at it, and not maybe literally, but it felt like literally looking up every other word, because I didn't understand the terminology of what they were trying to tell me. And that was just the business section. That wasn't even the financials. Like, okay, what does this company do? I don't know. So, it's just all those kinds of things. I had to grind, and that's just the way I have to do it. If it doesn't come easy to me, I have to grind.
Yeah. No, I mean, I think a lot of investors don't have that same ability to grind, and that's where a lot of opportunities can come. Because if you're going in the places where everybody says this is too hard,
right,
there can be a lot of opportunity there.
Yeah, for sure.
What are some of the tailwinds that you see for semiconductors?
I think I kind of mentioned it in payments, and I think it crosses over. We are so early in how we use money and how we transfer money across the world, and we're so early in the internet and how huge of an impact that has on our economies as well as our day-to-day life, and also just the things that we use in an everyday life are still are in the early innings of all of this. A lot of us think that iPhones have been around forever, for example. They're relatively new in the grand scheme of things, and the internet is not vastly older than that in the grand scheme of things. And so I think we're going to see things that we didn't even think we would think about in the next 10 to 15 years. And semiconductors are going to have a huge impact on that. And the efficiency and the ability to do all the calculations. Everybody's talking about AI, right? AI, which I get. But one of the things that, if you dig a little bit deeper, the semiconductors, GPUs, that's all about the semiconductor industry. AI doesn't exist without semiconductors. And even if you get away from the sexy GPU part of it and you look at just the air quote regular chips, they have a huge impact on that. Even a company like Texas Instruments has a role to play in what happens with AI. Even though they're more of an analog company, they will have a role to play in some of this. And so there's lots and lots of area to grow and room for this all to run. And I think it's hugely, hugely going to be profitable and great places to invest in.
Yeah, that's awesome. Let's talk about energy. So this third piece, energy, what attracted you there, and why is it something that you seem to keep coming back to?
Yeah, I think there's a couple things. So The first thing that interested me was, of course, during the pandemic, there was lots and lots of conversation about renewables. That was when that terminology, it had been used before, but that's when it really started becoming, I guess, a little more in vogue, and people were starting to talk about it. There was more and more attention being put to the energy sector, and I think to me it was super interesting, and I wanted to learn about it. Not because I necessarily at the time thought, "Hey, this is a place I can invest." It was more like, how is this going to impact us as people, and what is really going on here? So then I started digging into batteries, and it was super fascinating, and it's very deep, and there's lots of terminology and lots of technology going on, and there's also lots of I guess, not related to energy, but kind of mining, for example, the mining of lithium. Something I would have never thought about when I was thinking about a battery was, yeah, you got to pull the iron ore or the ores out of the ground to make the battery. And so I started learning about that kind of stuff. And then I think as I learned more about renewables, it was really fascinating. And I think there's obviously fantastic potential behind it, but I also felt like it was too early, in that it felt like we humans were trying to push something that the technology was not there yet. And the reason why I say that is, I'll give you an example. Solar panels are only about 25 to 26% efficient, creating energy from the sun that they attract. They also obviously don't work at night. And so that's what led me to batteries. So if they don't charge, if they do charge, but they don't charge all the time, and we use the majority of our energy at night, then how is a solar panel really going to help Andrew and I run our business during the day? Well, it will, but if we worked away from home, maybe not as much. And so that's why I started looking at batteries, and that just kind of led me down a rabbit hole. It's constant curiosity and rabbit holes that keep me going with all this. But at the time, I couldn't really find anything that I felt like was potentially a good investment. But I also know, with the rise of data centers and AI, that there's a huge demand for more power, and it keeps growing. And all the government reports that you read, all the industry reports you read, is that we do not have there's several things going on. We don't have enough power. We don't have enough power generation, and we don't have a real good, efficient way to move it from point A to point B, i.e., our grid is not capable of doing what we need it to do. So there needs to be an upgrade in that dramatically. And we saw all of this play out in Texas a few years ago with the unfortunate incidents that happened down there, where the weather turned, renewables weren't available, and they weren't able to get electricity to heat homes in different parts of places, and people suffered, and a few people even died. So all those things just go back to tell me that I think there's a lot of potential here, and it's an area that warrants deeper and deeper digging to try to find investment ideas. And I will find them, and I'm starting to find them. And I think this is going to be a really, really long runway of profitability for an industry. And I'm not looking at oil. Oil's on the too hard pile for me.
Yeah. Yeah. Me too. Lots of geopolitics there.
Oh yeah.
I think what's impressed me about your work in energy is, even though it's something that you were arguably just as passionate about as you were with payments, you still had the self-control to say, you know what, it's too early. The businesses haven't reached this maturity yet where I feel like this is a safe investment. And so you've just said, you know what, I can come back later. I can come back later. And that's a sign of a great investor, is somebody who can get excited, but also say no to things because better reason or wisdom or whatever you want to call it kind of comes in and tells you to pull the brakes. So it's something that I've observed that maybe people don't see every day on the day to day. And it's something that I think speaks really well to your passion, your curiosity, but also your wisdom when you make these decisions. So let's talk about Visa, because we're going to circle back to that.
Yeah.
I looked yesterday, and which by the way, like when I bought that, I first read through every blog post you did, because I couldn't figure it out either. Like, the way they make money is weird because there's the different banks involved, and there's two sides of banks and all this. And you're just like, what? When the opportunity was there for me to buy Visa at a decent price, I don't think I would have pulled the trigger unless I had your resources to dive into and finally understand how does this business work. And so when I checked yesterday, it's made a nice, very nice, clean 69% return so far, which after only several years is a great return. And what I love about Visa in particular, it's like that dream stock you always want on your team. It's like every earnings call, the earnings report's always like, double digit growth, double digit growth. What will we do this quarter? Double digit growth. And it's slow and steady. You get those gains as earnings rise. It's perfect. Just sleep at night stock, continue to grow at these great rates. Do you think they've done so well? Do you think they're still a good bet? And if so, what are some strengths that you think set them apart from other players in the industry?
They are unquestionably still a good bet. Part of the duopoly with MasterCard of being the payment rails for a vast majority of payments, not just here in the United States, but globally. And there has been so much competition trying to knock them off their perch, whether it's been regulatory, whether it's been other companies, and they just have not been able to get it done. The company has probably one of the widest moats you'll ever see. Whenever anybody talks about moats or competitive advantages, Visa and MasterCard are almost always the ones that people use as a textbook example of this. And because of that, they just have a huge strength. The way that the company operates is they don't look at other people in the industry necessarily as direct competitors. They look at them as opportunities to create new revenue streams or new payment flows. And I'll give you a couple examples. So the first one would be stablecoins. So stablecoins, when that first started becoming a big thing, and it was kind of around the time that President Trump came into power that started getting more attention and regulatory approval and things of that nature. And Visa, prior to that, was already working behind the scenes with several of the stablecoin providers as a way to try to integrate that technology with what it is that they do, so that the stable coins are still in essence running over the Visa rails, just in a different way. And so instead of looking at stable coins as a potential threat to disrupt Visa and MasterCard, they have both embraced it with open arms. And they are continually trying to innovate on that front to make stablecoins easier. And so that may or may not necessarily directly hurt Visa, but in the long run, it'll help them because it opens up other opportunities. And so that's one of the things that I love about the company and the management is that they're open to working with other companies, even air quote competitors, to try to enable things to go well. Square/Block/XYZ/Jack Dorsey. It's a Visa card. All these years, it's still a Visa card. And when Jack started the company, their initial mission, if you will, was basically to take out Visa and MasterCard and become their own rail, kind of like American Express is. And they were unable to do it. And so the only way they could grow was to partner with Visa. And so that's what they did. And to this day, they're still a partner with Visa. So to me, that is one of the strengths of the company. And that gives me a lot of confidence that they'll continue to be successful, because a lot of companies tend to get set in their ways. And that's usually when the dinosaurs start to go extinct. And that's when companies falter. And the fact that Visa is willing and open-minded enough to look at other companies is super appealing to me. And I think that's one of the things that sets them apart, not only from others in the industry, but just in general as an investment.
Yeah, that's awesome. I mean, I feel even better now. It's dream team squared.
Right.
I like that you brought up the moat. Let's talk about the moat, but let's talk about what's your moat, you think?
Oh boy. Yeah. If I had to, I guess, assign myself a moat, I definitely wouldn't say network effects or switching costs, but those are more traditional ones, shall we say? I would say my moat as an investor is, number one, I'm curious like a cat. I have to know everything. I drive my wife constantly crazy. I probably drive Andrew a little bit nuts too because I'm always asking questions. I'm curious like a cat. I'm not afraid to work hard. I'm not afraid to not understand. I'm not afraid to say I don't know and then go try to figure out how to say I do know. And so I'm willing to grind. I've always been that way. I've never been one of those people that has had a lot of like natural ability. And I'm not saying that to be negative. I'm just saying that a lot of times these things don't come naturally to me, but I'm willing to work at it to try to figure it out. And then the last thing is I'm smart enough to know that I don't know everything. And so I don't walk into investing thinking that every single investment I make is going to be a home run and that I am 100% right all the time because I am not, and the market will humble me, and I know that. And so I try to approach investing with I try to be as wise as I can and as intelligent as I can, but also know that I will make mistakes and I will try to learn from them.
So how do you manage risks then? That's a huge part to doing all of this, right? Like how do you manage a portfolio, and what kind of principles do you use when you think about portfolio management?
That's a great question. And managing the portfolio is arguably as important as picking the stocks because a lot of times you could find the greatest idea in the world and not allocate enough money to it or not keep going back to the well enough that you don't take advantage of a company that explodes. And likewise, if you make a mistake and you bet too big, then you can hurt yourself on the flip side of that too. And so Andrew and I have studied at the feet of Warren Buffett and Charlie Munger, as well as other great investors like Joel Greenblatt, Monish Pabrai, Terry Smith, Peter Lynch. The list goes on and on and on. And so I have tried to learn from their examples over the years of trying to be as prudent as I can while also still trying to employ some elements of optimism and enthusiasm. And Charlie Munger is a great guiding force for Warren Buffett, and I've always kind of admired the way he really tries to invert all the ideas. I know Warren Buffett always jokes, calls him the abominable no man, and so I try to think about that, and I try to have that idea in my head when I'm trying to think about companies. When I'm doing my analysis, one of the questions I like to ask to myself is, how could this blow up? What could go wrong here? What is something that could go wrong? And then try to look at what I know and the research about it and try to disprove that. And if I can get comfortable with that, I think that can help with how confident I am in making the investment. The way I approach risk is I'm probably a little less risk averse than Andrew is, but I'm not a whole lot more risk. I'm not going to be some growthy graveyard guy that's picking pre-IPO kinds of companies. I'm going to invest in companies that I think have long runways, that are profitable and have been around for a little while and have proven track records, managers that I trust. And so I'm not going to go crazy, go nuts with companies, but I am going to probably look at companies that maybe Andrew might not have looked at. And that's one of the reasons why we're doing this. And I think the other thing that is I have the mental balance, or I guess the balance here of, I know that when I'm making a pick and other people are looking to me for guidance, that I'm acting as a fiduciary. I'm not going to buy anything that I wouldn't buy myself. So anything that I'm suggesting are things that I'm going to buy. And I know that other people that are watching us, are listening to us, are going to buy the companies as well, based on the recommendation I give. And so I don't take that lightly. And I know that that's important. And it's something that I take very seriously when I'm thinking about, okay, what company am I going to look at? What company am I going to write about? And so even though I may be willing to take some risk, I'm not willing to take risks that will lose people all of their money. And so that is kind of the way I try to think about when I'm managing the portfolio. Is I try to have, I guess, 3 tiers, if you will. So one would be like a air quote a starter position, maybe taking a smaller bite of a company and getting to learn the business along the way. Another one would be more of a normal position, let's say 2 to 3%, and then another one would be a bigger one, would be 5% 10% or more. And that would be the big bite. And that's when I think I see a great potential opportunity. So yeah, that's kind of how I look about trying to manage it. I also will kind of caveat all this is that it's a learning process. I'm still learning, just like Andrew is still learning. We're all learning, and I will be as open and transparent about my decisions as I can. And if I make a mistake, I will acknowledge it and I will learn from it. And if I hit one out of the ballpark, I will do a victory lap in my little room and I will not brag about it. So that's that's just the way I am going to operate.
That's awesome. I think that's really helpful for all of us to hear. Let's talk about adversity. Let's talk about, we've been fortunate to be doing this a while. So we lived and invested through the pandemic. And I think that was a good way to kind of test that the preaching matches with, how's the phrase go? You walk the way you talk, whatever the phrases are. Yeah. So how did you react during 2020 when we hit the pandemic? Everybody thought the economy was going to shut down forever and there was a big stock market crash and bear market. How did you react with your investments personally?
Buy. I thought it was a great opportunity to take advantage of a situation where some companies were unfairly being punished that offered great opportunities. And a lot of times in the market, you make the most money when the market crashes, because that's when a lot of times when the market crashes, the tide goes out for everybody. And sometimes it's deserved, it's justified, but other times it's not. And so it's understanding those times when it's not, that you can take advantage of that. And my biggest regret, if you will, during that period was I didn't have enough money to invest more. Because that's when I first bought Visa, for example. And it was trading at like $150, $160, somewhere in that range. I think I bought Berkshire Hathaway the first time then, and it was trading around, I think, $180. Really nice. Yeah. Nice. And I also got Prudential, I believe it was, and it was trading around $40 a share. It got up to about 110 or so before I sold it. So it was, I found a lot of great opportunities at the time. And, I just wish that I'd had more money. That was, and to me, that's, that's the way I try to look at it.
Yeah. It was hard. It was a hard time to be optimistic.
It was. Yeah, it was very hard. It was scary, right? We were all terrified. We didn't, especially when it first started happening, you didn't know what was happening. You didn't know what was going to happen. You worried that your family was going to be impacted by this, and not just by your jobs, but potentially losing their life. And so all that stuff was very, very scary. And I just kept coming back to the words of Warren Buffett, right? Be greedy when others are fearful. And this was a perfect example of people being fearful. Now, were there companies that were certainly impacted by this? Unquestionably. A company like Carnival, for example, the fact that they were not going to have anybody sailing is how they make money. That's a huge impact on that business. Now, could have been a potentially great opportunity, possibly, but for me, it was in a too hard pile. But it certainly was good to be aware of that. Who remembers? I think it was the gas companies when gas futures went negative, like minus $20 for a gallon of oil, and how much that impacted the oil industry. All those things are certainly things to be aware of, but for me, it was just as I was, that was as I was learning about Visa, and I was coming across these other great companies. I'd been wanting to buy Berkshire forever, and then when it dropped so much, it's like, I don't see how this really impacts their business, and so it was a great opportunity. So that's why I tried to take advantage of those.
That's awesome. All right, we talked about some wins. That's easy. Obviously, we all know not every pick will be a winner. How do you deal with mistakes?
After I take myself in the back room and beat myself up a little bit, then I kind of come back to reality and realize that stock picking is hard. You are not going to win every single pick that you make. I think it was Peter Lynch or somebody, Terry Smith, one of those two, that said if you're 50 or 60% right on your picks, you're doing pretty good. And so that means conversely, you're going to have 40% of them are going to be losers. And so I think if you go into the game understanding that, and that doesn't give you, to me, it doesn't give you an excuse to not do the work and not to try to do your best that you can to make good judgments on companies. But at the end of the day, we are all just guessing. We don't know for certain what Google will do 5 years from now. We can project, we can certainly estimate, but we don't know for sure that it will do that. And if anybody is saying that out there, they're lying to you because they don't. And so when we're playing this game of trying to buy winners, that sometimes we're going to make mistakes. We're going to interpret something that maybe wasn't the right thing, and that is going to be natural. And so I think when you understand that, it helps ease the pain a little bit. It also sets up, I think, this mindset or mentality of, okay, I was wrong about this. Why? Why was I wrong? What about this was I wrong? And how can I avoid that in the future? So do I need to set up systems? Do I need to set up a better checklist? Do I need to look at more sources or more alternative sources of information to make sure that I'm not just tunneling in on one particular thing? Because that can be very easy to do. You could just focus on one thing, and that you base all your judgments on that one thing without looking at the other side of the investment. It's always a good idea to look at the downside of the investment. What could go wrong? What's a bearish thesis on a company like Visa, for example? And so that's how I tried to learn from my mistakes. And I've had two pretty good ones. Certainly busted PayPal, and I definitely made a huge mistake on Intel. But I've learned from both of those, and I've tried really hard to put the parts that I learned from those in my process so that I don't make those same mistakes. Doesn't mean I won't make new ones. I'm an equal opportunity mistake maker, so I could make mistakes in the future too. It's just it's something to be aware of, and that's how I try to deal with it.
Yeah. It's cool to hear you go through that journey. You also got that dog in you, though. You have this grit that you just kind of pick yourself up after getting beat down. And I think a great example of that is the whole JP Morgan thing. So, like, I know the story. Maybe you can share the story, and then, like, what is it about you that allows you to kind of pick yourself up like that and have this grittiness?
Um, so when I first started getting into investing, I was working at Wells Fargo at the time, and I had a financial advisor in a branch who was kind of help guiding me through all this. And as I decided I wanted to become a stock picker, his suggestion was to start learning about companies. And so I was like, well, I like banks. And so I think I'll learn about banks. And so I decided I would pick up JP Morgan, and that would be the first company I would read a 10K. Unbeknownst to me, that it is 200 and I want to say 29 pages of mostly banking jargon, legalese information, disclosures, all kinds of cautionary tales, all kinds of regulations. It's a slog. Like let me put it this way: if you ever have trouble sleeping, forget medications, forget noise machines. Pick up JP Morgan's 10K and read the risk section. You'll be asleep before you get to the second risk. I'm telling you, it's gruesome. And so I had that going on. And then I also I don't understand most of what it's telling me. So I was almost literally looking up every other word. Like, what is this? What is an efficiency ratio? What is a net income margin? I don't know what that is. What is a non-performing loan? Like, well, that sounds like, logical, but am I right? So, I had to look up all of those things. And so what would normally take maybe an hour or two probably took me a week, if not longer. I will admit I was doing it on air quote company time. So I was doing it at on my work computer. So I was, not really being a good employee to Wells Fargo. I apologize now, but it's really kind of how I learned to do it. And I guess it was I have never not finished a book. And in my whole life, I've been reading since I was a little kid, and I've never not finished a book. I've always finished a book. Even the worst book I've ever read, Moby Dick, I grinded through it. Probably the second worst was Security Analysis. That was another snooze fest, but I made it through it. But I don't I don't like to quit. I'm okay if other people don't do that, but I'm not a quitter. And so I just if I put my mind to something, I'm gonna go through it. And so with this JP Morgan, I was gonna figure it out. I was gonna figure out how this works. I was gonna figure out all the terms and I was gonna do it. And a good key for me that I'm interested in something is if I can't turn it off after I'm done with it. So I would go home, for example, for work, and I would be making dinner, and I was thinking about the things I would learn from JP Morgan's 10K. And so that to
Nice.
me was like, okay, this is something I'm interested in. It's definitely, and that helps me keep going too because it's something I'm interested in.
Yeah, for sure. And it's very clear from the issue, the October 2025 issue, that you are very interested. I think it's 25 or 30 pages, so it is quite the meaty stuff, and it's all good stuff. Like it's a great read. So how did you become a writer? Like where did that come in?
Um, it several things. First is I read a lot. I've read since I was a little kid, and I've read a broad range of things. I've always been, as I mentioned earlier, super curious about things, and so I read a lot of different writing things, literally from Shakespeare to Stephen King, and anything in between. So history books, I love history, Roman history, World War II, American Civil War, things like that. I would just devour those kinds of books, and I also loved great fiction books, but I also loved classics. My grandfather was a classical writer, and so he got me into Shakespeare and Dickens and things of that nature. And so I just love reading, and so I read for a long, long time, and I think that really helps you unknowingly become a good writer because you see what good writing looks like. If you read Hemingway, you understand what good writing is. Now, does that mean you can do it? Well, that's a lot harder thing to do. The other part of it is I studied writers that I admired. I no joke. I studied Andrew. Like I liked his writing. I liked how personal it was. I liked that he used short sentences, and I tend to be a little bit long-winded when I write, and maybe when I talk. So I admired that about his writing. He used bullet points to kind of break up the views on the paper, and I really like that. I studied Hemingway. Again, I tend to be a little bit long-winded, and so I love the fact that he can communicate so much in very short, concise sentences. And I love the way Joel Greenblatt writes. He's very descriptive, he's very eloquent, but he also has a way of communicating things simply that people can understand especially when he's talking about money, because it's not always an easy topic to talk about. I admired that. And of course, Warren Buffett. I love his writing. He has a very clear, concise way of writing as well, but he's also really good at intertwining humor and his personality into the writing as well. And so I've tried to pick up on some of those things. So that's it. And then the last thing is I just frankly written a lot. Since Andrew and I have started, if you go to our blog posts, if you go to our website, einvestingforbeginners.com, you're going to see a lot of Andrew Sather and Dave Ahern articles on there. He and I were writing 2 to 3,000 word articles twice a week for many years on the blog. And so all that work, writing constantly, it definitely has an impact. And hopefully, it helps you become a good writer. I think the more you do, the better you get. And the more you learn from it, the more you learn from it. So that's how I've, tried to become as good a writer as I can be.
Yeah, and you wrote a lot of tougher things too. It wasn't all rom com and
Mm-mm.
fantasy.
No,
Not
no,
quite.
no.
So, like you mentioned, we've been doing this a while. What still gets you excited about stocks and the stock market?
I still find it endlessly fascinating. I still find, even after doing it all these years, learning about a new business or learning something new about a business you already know, all those things to me are endlessly fascinating. And I think some of it stems from the fact that I am fascinated with how creative we as human beings can be, and always amazes me to see when somebody comes up with a really great idea of something. And I just marvel at that. And so that to me is like uncovering, it's like a Christmas present every day. You get to learn about something new. And I also think it's the hands down the best way to grow your wealth is to invest in the stock market. Because when you think about it, we're really just doing a small part of it. When you buy Microsoft, you're really putting your faith in Satya Nadella and his team that they're going to do all the heavy lifting. All I have to do is decide, do I trust him and do I think this company can make themselves money, i.e. us? And if I do, then my hard part is done. But they still got all the other effort to go through to get all that done. And so I don't think and there's a lot of conversation about passive income these days. And I won't say that stock investing is passive income, but I would certainly say it can be if you do it right. Those are the reasons why I'm still excited about it.
Oh man, that's super well said. And the passion shows. It's awesome.
Yeah. Thanks.
So let's talk about Value Spotlight. What about Value Spotlight will stay the same with you as portfolio manager, and what's going to change?
As I said before, the stock picks they're not going to change vastly differently. The same principles that Andrew and I have been talking about for the last 7 years on the podcast, and Andrew has been writing about, and I've been writing about Warren Buffett and Charlie Munger and the ways that they kind of invest. Those are not going to change. Nothing about that is going to change. The pick once a month is not going to change. Those kinds of things, the $150 to keep going is not going to change. The idea that this is going to be a get rich quick scheme is not going to be part of the equation. If you're listening to this and you're a day trader and that's what you love to do, this is probably not for you. If you're looking for the next thing that's going to go air quote to the moon kind of thing, where you're barking up the wrong tree. So those kinds of things are not going to change. What will change is the write-ups may be a little longer than you might be used to, and you may see companies that may not have fit the Andrew risk portfolio, or they may have been outside of his circle of competence or comfort zone. And so the way he and I invest is mostly similar, but there are going to be changes. There are going to be different things. I'm going to pick different companies, and I may pick companies that are international that Andrew may never have touched, but I'm more comfortable with that. And so that is, I think, probably, if you had to put a finger on it, that would probably be the biggest thing that will change.
Yeah, that's awesome. Can you give us like a sneak peek of some of the big opportunities you've been digging into? I kind of mentioned one, which
Yeah.
I'm really excited to buy personally, but I can't yet. But
You're right.
yeah, can you give us a sneak peek?
Yeah. So there's a lot of things that are kind of on my radar. The first pick is going to be a bank. Shock. I know everybody's super surprised. It's going to be a bank, but it's a very fast growing bank. It's profitable. It's in a region that has been underserved traditionally by legacy banks. And I think it has a very long runway to go. And I'm super excited about it. And I've been super excited about it for a while. And so I'm excited for people to discover that. And there's some other companies in the energy sector that I'm looking at as well. Some of them are directly in the energy sector, i.e. they're generators or producers of energy. But I'm also looking at other parts of the food chain, if you will, that will help feed not only maybe the infrastructure play that I was talking about earlier, but also different items that are related to the AI and the data centers that are being built out. It's not just the chips or the computer stacks, but there's also the energy that goes into powering those, as well as the connectors that go into making sure everything works, and lots of different parts of that ecosystem. And there's a lot of great opportunities in there that are definitely fly under the radar and are not as talked about as much. And so those are things I'm super excited about. And there's a couple other payments companies that I'm looking at as well. One is in the retail space, shall we say? I don't want to say exactly what space because it would give it away, but it's something I came across a few years ago and was frankly kind of like me. But now that I look at it again, I'm like, yeah, maybe I was a little too harsh on my premature judgment. So there's definitely some exciting companies coming down the pike that I'm excited to learn about, and I think could be great investments for all of us.
Yeah, I'm super excited for all of that. So, how do you handle the responsibility of knowing there are people on the other side who are looking at these picks that you are picking?
Yeah, so I take it very seriously, and uh, uh, I understand that my money is other people's money. So it's not just me making a bet on what I think a company will do, and so I have full acknowledgement of that. And I also have a post-it note or a sticky note next to my computer, basically telling me that you have to remember that you're not just investing for you, you're investing for Andrew, his family, my daughter, and all these other people. So that alone gives me the it doesn't overwhelm me that I'm like I can't make the decision, but it also makes it real. Like I'm not it's not just some random people out there. It's, people like Brandon and Jackson and Tyler and C Ocean and all these people in our community that listen to us and follow us. Those are real people. And I understand that, and so I take that very seriously. And it's not just my money that I'm making an investment with. So I try to keep that in mind at all times.
Yeah, and I know it's something that you will be serious about as you are portfolio manager of this. One of the things people don't really get to see a lot from this side, I get to work with Dave every day. You have a lot of empathy too, and so when you say something like that, I know you mean it. Um, the fact you have a lot of empathy makes it definitely fun to work with you, makes it fulfilling, and I think people can have confidence in that. But where does that empathy come from?
That's a great question. I think I've always been I've always been a person that was interested in other people. And I've always been one of those people that probably, sometimes to my detriment, have put other people's needs and hopes and wishes ahead of mine. And so because of that, then I try to be, I guess, more connected or attuned to what other people are thinking and how they're feeling, and try to navigate my emotions or my reactions to people based on how they are reacting. And I had a friend in college that told me once that um, I had a really good radar for how people were feeling, and he was impressed by the fact that I could, just by talking to somebody over the phone, I could tell that somebody was upset and I didn't know them, and that I could try to emphasize with them and try to feel their pain and try to help them in any small way that I could. And so when I'm thinking about investing or working with people, I try to I try to be cognizant of everybody else and what their emotions may be going on. And Andrew and I in particular, because we spent many years recording the podcast over the phone, in essence, that I got really good at being able to pick up on his mood or his emotion by the tone of his voice, because that's all he had to go on. And so all those things, I think, go into building me into being somebody that tries to have some empathy for people. And I also try to find commonalities with other people, like our business partner, Steven. Spent a lot of time in the military. I'm fascinated with war history. And so it's always a lot of fun to talk to him about some of those things and what he experienced, because that gives me a better connection to maybe what I know, but it's also something he's excited about. And so that helps kind of build a rapport with people. I do the same thing with sports or any work related things, that kind of stuff. So that to me, I think, is where it comes from. I also got to give some shout out to my mom, because my mom has high empathy as well, and so obviously I picked that up from my mother as well.
Super cool. I mean, it fits too with what you're saying about being curious. Like you're curious about other people, and
Mhm.
that provides opportunities like you wouldn't even imagine sometimes, and
Yes.
makes you come across really interesting
Hmm.
things and companies and all of that. So
Yeah.
it's definitely a great strength.
Thanks.
Anything else you think if somebody's been listening to us for a while, maybe they've never taking the plunge with Value Spotlight.
Right.
Anything you would say to them about considering a subscription?
Yeah, I think the way I would look at it is if you're an investor or maybe a retail investor, somebody that's looking through the investing lens of I want to buy companies that I can own for a while, and you think that this is the way that you want to invest, but you don't have a lot of time to dedicate to doing the research, i.e., you work a lot, you have a work a lot and have a family, or you have other social commitments, or maybe you just don't really want to learn all the ins and outs of finance that are necessary to be a stock picker, then Value Spotlight is the thing for you, because what Andrew has been doing and what I'm going to continue to try to do is try to help find great investments that you can buy and not have to do a lot of worrying about, because that's my job. That's what I'm getting paid for, is to do all the worrying and all the heavy lifting. You can certainly ask me questions. You can certainly debate whether you think this is a good idea or not. But if you're just looking for good, solid ideas that you don't have to stress a lot about, and you're not having to constantly watch the teleprompter to see how the company is doing, then this is the investment service for you, because we're going to try to provide, companies that have good long-term characteristics, that have a margin of safety, and that will be good, profitable businesses for you and the company over a long period of time. So that's what we're going to do for people.
Yeah, I think that's very well said. If you've been subscribed, your subscription is going to stay the same. Obviously, the write-ups will be a little more in depth than mine were. Real money portfolio is still going to continue. Still has the same original goal, 11% return over the very long term. I have full confidence in Dave. I believe in Dave, his decision-making abilities. So I can't wait to see what's next. I'm confident it'll be a worthwhile transition for all of us, for our portfolios, our futures, and our lives. So thanks for being on this journey with me so far, Dave, and I'm looking forward to this next chapter.
Yeah, me too. Me too. It's going to be a lot of fun. And if anybody has any questions along the way, please do not hesitate to reach out. Andrew and I are both here to help answer any concerns or any questions you might have along the way. And with that, we'll go ahead and sign us off. You guys go out there and invest with a margin of safety. Emphasis on the safety. Have a great week, and we'll talk to you all next week.